हेलो।
हेलो।
चलिए शुरू करते हैं विद स्मॉल टॉपिक डेट गवर्नेंस। अब आ जाओ आपके फार 4 पे। एक छोटा सा एग्जांपल है। I'll explain you first what is debt governance and then you can go through the example quickly. So debt governance का मतलब होता
Can you
है,
share?
चलो मैं स्क्रीन शेयर करता हूँ। So the meaning of debt governance means you have a certain terms and conditions which you require to follow when the loans are taken. So for example, if you are taking a loan from a bank, there is a condition attached that you cannot issue any new loans now, or your current ratio has to be 1.5 is to 1, or your working capital ratio has to be 2 is to 1, or you cannot make a certain asset sold. So there could be any terms and conditions could be attached. So at your end, you are just going to calculate whether any terms and conditions are fulfilled or violated. If it is violated, then there may be a restructuring of your debt, or maybe creditor can come and demand early payments from you, or there may be a change to your loan terms and condition as per both parties agree. So again, in nutshell, debt governance means terms and conditions which your company has to follow when certain debts are taken. Example number 8 एक बार check कर लो. We already have understood all the concepts of restricted cash back in FAR 3 when we did cash and cash equivalent. Journal entries check कर लो. What is the solution एक बार check कर लो. कुछ question है तो पूछ लो. So over to you, entire section 4, 4.1, 4.2, example number 8.
Done.
चलिए now शुरू करते हैं एक नया concept which is our bond accounting, and I'm straight away running into the practical. Here is it's your homework, because whatever we are going to discuss in practical, everything is covered as a part of the theory, so it will be your homework to go through all the theory concepts. Now when you are doing a bond accounting, there are a couple of steps which you have to follow, and if you follow this couple of steps, your answer will never go wrong. Now first of all, what is bond? So bond is a instrument, it's a security which a corporate issue, and there are investors who purchase the bond. Now in exchange of a bond, company regularly pays the interest, and at a maturity you have to redeem the bond. It means you have to return the principal back to your investor. Bond is carried as a long-term liability in your balance sheet. Now there are few concepts which is bringing your amortization table, effective interest rates, and all those calculations in the picture. Now, hypothetically, not going into the real world, but very hypothetically, suppose you have one bond which is traded in the market at $100, and let's say that bond has so that bond is trading in the market at $100, and it is giving 10% rate of interest. Suppose you have $100 in the pocket. With $100, you can buy a one bond at a 10% interest. This is called a fair valued bond. It means rate which bond is paying, it's very much equivalent in the market. So your bond is also paying 10% interest. In market, generally the similar class of the bond is also paying a 10% interest. It means $100 which you are paying today, it's a fair market value of a bond. But now let's say you are purchasing a one company's bond, and that company is ready to pay you a 16% rate of interest. Now in the market, you generally only get a bond which are ready to pay you only 10% interest. Now why your company is paying you a 16% interest? Maybe that company is more risky. Maybe the credit rating is not too good. Maybe you are incurring a very high risk of default by the company, and hence the company is paying more interest to your investor. That means this bond may be a discounted bond. We will see why it is discounted, but this could be a discounted bond. Why? Because market is saying that you have to pay only $10 as an interest, but that company is ready to pay the $16. It means that's a very high risky bond, and maybe a company is ready to give the bond at a discount. Or let's say you are purchasing a bond, let's say Apple or a Tesla, and they are only ready to give you a 7% rate of interest. Market says you have to pay 10% interest, but Apple or a Tesla bond is just giving you a 7% interest. Why? Maybe it's too safe. Maybe they are charging premium. Maybe they are charging goodwill. Maybe they are charging the reputation. So they are not ready to pay you as high as 10%. So maybe these bonds are issued at a premium. So generally, if the value of your bond is exactly equal to the value in the market, then generally it is called bond is issued at a par. So first option, it is called bond are issued at a par. Let's say the value of your bond is below the market rate, then it is called a bond is issued at a discount. Or if the value of the bond is more than the market, then it is called bond is issued at a premium. Now, how do you do all this calculation? So you have a step number one. So what you have to do, first of all, you have to calculate a present value of the bond. You have to use effective interest rate, that is a yield rate or a market rate, and then you have to check the value whether it is matching to the market value or not. Let's check one practical, and let's draw a table. Let's do manually. आपका एक question था how to calculate the present value factor if it is not given in the question. So let's just do a year. Let's do a cash flow, a present value factor, and what is the present value of the bond ultimately. So going to the book, a bond is issued at a par. So right now they have already given, but let's just get a comfort that why it is issued at a par. So what they are saying, a bond is issued at a par when the stated rate on the bond is equal to the market effective rate. It means your bond is also giving the 10%, market rate is also giving the 10%. So it is assumed that a bond is issued at a par. Let's see example number one. Assume that a Christie Corporation has issued a 10%. So this is a stated rate of interest on the bond, 1 million bond which are due in the 5 years. The bonds are issued on January 1. Interest is due half yearly. So every 30th June, your interest is due, and the market rate is also 10%. So now we are very clear that market rate is also 10%. Your company has also issued the bond at a 10%. So your present valuation answer will match to 1 million exactly. But let's do the calculation. So here year, or I'll say a period. So you have interest due on 30th June and 31st December. So 30th June year one, 30th December year one, and let's just say this is year two, year three, year four, year five. And what is the tenure of the bond? I think it was a 5 year. So this count has to be 10. Yeah. So this is year two. This is year, oh, sorry, but this is year two. This is year three. This is year three. This is year four. This is year four. This is year five. And this is year five. Now, generally, your present value factor are very simple. You say what? If it's a 10%, then 1 divided by 1.1, and then keep on carrying what divided by 1.1. If it's a annual interest payments. But in this example, they are saying that interest are paid semi-annually every 6 months. So the rate also you have to do a semi-annually. So not 10%. Now we are going to take rate as a 5%. 10 divided by 2. Had it been quarterly, we would have done 10 divided by 4. Had it been monthly, we would have done 10 divided by 12. So that's a manual method I'm teaching to you. Otherwise, question already has given you the annuity, and you just have to multiply annuity straight away. This is semi-annually. So I'm going to do 10 divided by 2 as my present value factor.
Oh, what was the manual method you said?
Manual method I'm teaching to you. It is not given anywhere.
What's the method?
I'm I'm doing on a screen right now. How to calculate present value factor manually. In question, they already have given you present value factor. But last session, you asked me a question that what you have to do if these factors are not given. So I'm telling you how to calculate these factors. So at 5%, your factor is 1 divided by 1.05. And let's keep carrying on divided by 1.05 till end. So these are going to be your present value factor. Now, what are the cash flows we are incurring? So you have a 1 million bond, which has a 10% coupon rate, and you pay interest semi-annually. So you are paying the interest of 1 million at 10%, which is semi-annually. So you are paying $50,000 of interest every 6 months. So your outflow are $50,000. Now, in the last period, you are also going to redeem the principal value, which is entire 1 million, because at the end of the bond's life, you have to pay back the capital to your investor. So the last period's cash flow, it's going to be the principal plus interest both. I hope I have added right amount of zero, 3 here and 3 then. So 1, 2, 3, 1, 2, 3. Yeah, okay. Let me just do all this into 3 decimal points. So let's just calculate what is the present value of my bond. If it is not tying, it means we would have done some mathematical mistake. So exactly, if you see, the value of your bond now is exactly 1 million. So if you do a total here, so the value of your bond is 1 million. This is exactly matching to your fair value, which is your market rate of interest. Now, this is your format and formula you have to use across the chapter. If you understand this table, then bond chapter is over. There is nothing more than this particular table. So one more time, हमने किया क्या है? First of all, determine what is the period of interest and principal repayment. In our example, we did everything which is semi-annually. So 30th June, 31st December, 30th June, 31st December. We keep on paying the interest till year 5. In the last payment, we always repay the principal back, and we use a present value factor. Now, present value generally it's a 10% if it's an annual interest payment, but this case was a semi-annual, so we did 10 divided by 2. So we use 5% as our effective interest rate. Had it been quarterly, we would have done 10 divided by 4, which would have been 2.5%. Had it been monthly interest payment, we would have done 10 divided by 12. So because it was a semi-annual, we did 10 divided by 2, which is a 5%. We draw this annuity table there, and then we just calculated the present value. यहाँ से आप कैसे कर सकते हो? In the question you have a 50,000 of annuity for all the period. So what is the present value of the $1 annuity at 5%, which is 7.72? So you can simply do 50,000 interest into 7.72 plus repayment of principal 1 million into 0.61.
50,000 into. Uh,
50,000, this is the present value calculation, 7.7217,335. Because this is the annuity, 50,000 are annuity payments. And for one time payment, you can do 1 million into 0.613913. So this is a shortcut method which is you would have learned under present value table. अगर नहीं समझ में आता है, every time just draw this table, do this calculation and your answer will be out. So if we see a shortcut method, what they have used, or I think they have used 50,000 into 7.71. So if you see, they have done 50,000 into 7.72, that is the annuity factor. And for principal repayment, they have used 0.61 as a one-time annuity factor. So this is the shortcut method which they have used. अगर ये समझ में आता है, well and good. If it is not, then you can just draw a table every time like this, and just you can get the value of the bond from the total of this particular column.
when do we have to take the principal amount and then discount it and then do it?
Discount
Like,
कहाँ पर आया? When I said discount, you have to take
uh, so how do I differentiate
between what?
from like the notes payable calculation in this?
Both are same. You don't have to differentiate anything. These are just a separate chapters given. Ultimately, the purpose are same only. If it's a bond payable, notes payable, we will land at the same place only. It's just topics names are different. Mathematical concepts are exactly the same. So you don't have to be confused that why it's notes payable, why it's bonds payable. All are long-term debts only.
But we don't have to add anything to the principal here.
Why you will add to the principal? It's a bond issued, so you are issuing the debt, and when debts are redeemed at the expiry. Unless question में आपको अगर बोला गया है that you are repaying 1/5 of the bond every year, if they have saying that particular information specifically, then on every 31st December you will repay 200,000 as a repayment जो आपको notes payable में दिया गया था. So it depends how the question is drafted. अगर ये question में बोला है कि you are repaying 1/5 of the bond every year, so you will add here not only 50,000 but 200k also. Here also you will add 200k. Here also you will add 200k. So notes payable generally are due every year. Bonds are generally due at the end of the tenure. So again, conceptually, both the things are exactly the same. You just have to understand how the question is drafted. If they are giving you a repayments in between, then you have to calculate present value accordingly. If you are repaying at the end of the tenure, then you have to calculate accordingly. तो आपको बस इंटरप्रेट करना है क्वेश्चन में कि कौन से पीरियड में कितना कैश फ्लो आपको डालना है, एंड जस्ट मल्टीप्लाई विद द प्रेजेंट वैल्यू फैक्टर. इसका कोई मतलब रट्टा मारने की चीज नहीं है कि नोट्स पेबल है तो ऐसा होगा, बॉन्ड्स में ऐसा होगा. इट प्योर डिपेंड्स ऑन द इंटरप्रिटेशन ऑफ द क्वेश्चन.
Okay.
चलिए, what is your entry? So it's a fair value bond. So the borrower, which is the issuer, a company records cash debit to bonds payable. Investors point of view, it says investments in bonds account debited to cash credited. So this is a very simple. Now I'll hand it over Google Sheet to you. Second example, पूरा format आप खुद copy करो. Now what is given in this example? आपके bond का interest rate है 10%. Market is ready to pay you 12%. That means you are getting a lower interest from the particular bond. So just do all the calculation, get what is the valuation of the bond, and try to first calculate the value of the bond, फिर entries पे हम बाद में चलते हैं. So over to you, example number 2, mathematical solution.
I will use 10%.
You have to always use effective interest rate. So what present value factors you have used?
Mhm. Uh,
Why 10%? Let me just go through the question. Interest payments are again semi-annual. So 10% is a stated rate of interest. Your market rate is 12%. So first of all, you always have to use the effective rate or a market rate. So not 10, you have to use 12% for the present value factor. Cash flow will be at a 10%, which is your interest payment by the Christie Corporation because it's a legal contract. But accounting purpose, you are going to use effective rate of interest, which is 12%. Also, it's a semi-annual interest. So you have to do 12 divided by 2. So your present value factors will be at 6%. See in the last E column, last example, we did 10% divided by 2. We used 5% as the present value factor.
uh, 10%.
Check out the formula here, cell number E32, 1 divided by 1.05. Why we take 5? Because 10% was effective interest rate and then payments were semi-annual. So we did 10 divided by 2. Here your effective rate is 12%. So it's a semi-annual. So you are going to do 1 divided by 1.06. Just drag the formula then till the end. Okay, now let me share the screen again. So your value of the bond is not now 1 million. Your value is discounted and the value of your bond is 926K. So what is the journal entry for this transaction? Your calculation is absolutely perfect. So let's tally. Yes, 926K, which is the value of your bond. Perfect. Now, from the company's point of view, company is receiving the cash of 926,399, but the value of the bond, always the securities are recorded at a face value, whether it's a equity or it's a debt or it's a long-term loan. So the debt it's 1 million. So the difference is discount on bonds payable, and discount on bonds payable is recorded net of bonds payable in the liability section. What do I mean? So let's say there is a balance sheet extract of the company. Under the balance sheet extract, they have a long-term liability. Under long-term debt, they have a bonds payable, which is 1 million. And then they show negative value, which is discount on bonds payable, which is 73,601. And your net value of your bond is 73,601. Now, what happens to this particular item? We will see in next chapter, which is bond part number 2. In this chapter, our focus is only to calculate the valuation of the bond. We are right now not concerned ki what will happen to this particular bonds payable, how this account will get closed. We will see this in next part. Now, over to you. Example number 3. This is
Why am I not getting 1 million?
1 million. Where you are not getting 1 million.
The
It
total
is
present
given in
value
the
is
question. It is given in the question. It's a issued value. The valuation of the bond is 926K. So the difference between 1 million, which is written on the legal paper, and 926K, which company is collecting as a cash, the difference is 73K is a discount. So company को pay करना चाहिए था 12%, but company दे रही है सिर्फ 10%. Why? Because your bonds may not be that good enough. तो आप उसको कम वैल्यू पे दे रहे हो. Think from company's point of view कि जब मार्केट में इन्वेस्टर्स को 12% मिल सकता है, तो कोई इन्वेस्टर आपका 10% का बॉन्ड क्यों खरीदेगा, अनलेस यू गिव हिम अ डीप डिस्काउंट. तो यहाँ पर कंपनी क्या कर रही है कि हम बोल रहे हैं कि हमारा बॉन्ड 1 मिलियन का है, लेकिन अगर आज आपको हमारा बॉन्ड खरीदना है then give us only 926K. So you are getting a $73,000 of discount because our bonds interest rate is lower than the market rate. ठीक है. अगर आपका फर्स्ट एग्जांपल में क्या था कि मार्केट रेट भी 10% था, आपका बॉन्ड का रेट भी 10% था, सो इट एग्जैक्टली मैचेस 1 मिलियन एज द कैलकुलेशन ऑल्सो. 1 मिलियन वॉज रिटन इन द लीगल पेपर ऑल्सो. सेकेंड एग्जाम्पल, आपका लीगल पेपर में 1 मिलियन लिखा है, but your value of the bond is only 926K. तो जो difference है, difference has gone into a discount on bonds payable account.
But aren't we using the market rate, so shouldn't we also get the same value? Yes.
कैसे आएगा? आपका मार्केट रेट 12% है, योर इंटरेस्ट पेमेंट्स आर एट 10%. आपने जो भी कैश फ्लो यहाँ पर कैलकुलेट किया है, इज इट एट 12% और 10%? दिस कैश फ्लो आर ऑलवेज एट स्टेटेड रेट्स. सो स्टेटेड रेट है आपका 10%. दिस इज ऑलवेज एट अ मार्केट रेट. आपका मार्केट रेट है 12%, तो आपने 10% के कैश फ्लोस को 12% पे डिस्काउंट किया है. यहाँ पर क्या था, आपका स्टेटेड रेट भी 10% था और मार्केट रेट भी 10% था. इट वॉज एप्पल टू एप्पल कंपेरिजन. सो यू गेट 1 million का बॉन्ड का वैल्यूएशन 1 million एग्जैक्टली. हियर 10% का कैश फ्लो आप डिस्काउंट कर रहे हो 12% पे, सो आपका वैल्यू एग्जैक्टली नहीं आ सकता है, एंड दैट इज वाई देयर इज अ डिस्काउंट एप्लीकेबल हियर.
Okay.
चलिए सेम टेबल एग्जांपल नंबर 3. यहाँ पर बॉन्ड आपके प्रीमियम पे इश्यू हो रहे हैं. मैथमेटिकल कैलकुलेशन इज एग्जैक्टली द सेम. प्रैक्टिस पॉइंट ऑफ व्यू फटाफट से सॉल्व करो.
And then
Okay, so what is the value of your bond? So your value of the bond is 1 million exactly. Why? Because now your bond is paying the more interest. So let's quickly go through what is the value of your bond. When bond is issued at a premium, the valuation is 1081,109. Perfect, 1081,109. How it will be presented? Your bonds payable. Now you will have plus, you will add premium on bonds payable. Now this is the difference between your value of the bond minus the market value, sorry, minus the face value of the bond. So face value it's 1 million. So 81,000 will be recorded as a premium, and you will have the value which is represented in the balance sheet at 1 million. We will see what happens to the discount and we will see what happens to the premium on the bonds payable. एक बार एंट्रीज देख लेते हैं दोनों पर्टिकुलर केस में. यहाँ पर we saw cash account, the difference was discount on bonds payable. What happens in case of the premium? You receive a more cash. Now why more cash? Because market is offering 8%, but I am offering you a 10% bond, so I will charge you more right now. So cash account debited 1 million, to bond account 1 million, and the difference of 81,000 is a premium on bonds payable. Now यहाँ तक कोई भी doubt, any question you have?
Uh, we didn't say. Sorry. Premium is if the company gives us in less or in more.
So
The,
if company is giving more interest, it means they are issuing the bonds at a premium. More rate of interest means they are charging more money from you right now. So it is called premium charged. If they are issuing a less rate of interest from the market, then it is called a discount, where company is charging less money from the market rate. Okay, now let's move to few more things. यहाँ पर we have already seen how carrying value works. So carrying value will be your face value, which is your bonds payable, minus discount or plus premium. So plus premium or minus discount, you get a carrying value. Now another small concept and one practical, and then the first part we can get over, and then you can check out the theory. It's exactly the same what we have done so far. Now, when you issue any securities, certain times you are going to issue a lot of startup cost. For example, a legal fees, accounting fee, underwriting commission, printing, securities fees. All those charges are called a bond issuance cost. So any costs which are incurred to issue the bond, they are treated as a bond issuance cost. Now, bond issuance cost, they don't go into the income statement directly. Rather, they are treated in the same way how we treat premium or a discount. So bond issuance costs are presented in the balance sheet as a direct reduction to the carrying value of the bond, similar to the bond discount. So for example, you have issued a 1 million bond, but the cash received is only $9,90,000. $10,000 is a bond issuance cost. So you will not show $10,000 as an expense in your income statement. Rather, you will show as a reduction of the bonds value in the balance sheet. Very similarly, how here we saw the difference. So how your entry is will shape up for the bond issuance. So let's say you have received a cash of 9,90,000. Instead of recording a discount expense, no, don't record discount expense. You will have a bonds payable, which is 1 million. Here you say bond issuance cost oblique bonds payable issuance cost debit 10,000, and this is netted off in the balance sheet. So how your balance sheet will look like? You will have a long-term debt in the balance sheet. Now here you will have less bond issuance cost of 10,000, and you will have a net receipt of 9,90,000. So bond issuance costs, they are treated very similarly how bond discounts are treated. Now bond issuance costs are amortized as an interest expense. We will see in the next chapter, so let's ignore this line. We have not seen how amortization actually works for the premium, discount and issuance cost. So we will see this in next chapter. Example number 4, over to you.
How is the cash 906,000?
So you have a 1 million, which is the legal value on the bond, but your effective valuation is 926K. The same example number two you saw, its continuation. So generally your entry would have been cash account debit 926, discount on bond account would have been debited by 73,000 to bonds payable 1 million. But now you have also incurred a bond issuance cost of 20,000. So you are not receiving 926K in full. 20,000 are also less received because of the expense you have incurred. So now net cash received, it's 926 minus 20,000, which is 9 lakh 6,000. Then you can have a two more accounts. First account, discount on bonds payable 73,000. Second, discount on bond issuance cost 20,000. Two, bonds payable 1 million. Here they have clubbed both the line, which is also okay. It's an example. So they have clubbed 73,000 plus 20,000 together, 93,000 as a discount on bonds plus bond issuance cost.
Okay.
चलिए, now one more example, example number 5. This is a deferral bond cost. So one small concept before we you go for this example. Again, a very simple one. This is just like a prepaid insurance. So what happens in case of prepaid insurance? You pay your insurance today, but your service period is for next 3 years. So आप क्या entry करते हो? Prepaid insurance debit to cash, and then you amortize the prepaid insurance over 36 months. The deferred bond issuance cost is exactly the same concept where you have paid the bond issuance cost in advance before the bonds are issued. So right now bonds are not issued in 29th of June, but you have paid your underwriters $20,000 of the charges. Now let's say bonds are issued on the 1st of August. So what entries are required? So whenever you do any advance payment, you park the bond issue cost in your deferral, which is your current asset, and when actually the bonds are issued, you reverse that particular account. एक बार देख लो example number 5. If any question, we can go in detail.
This is from the company side or the
Company side, the
customers?
bond chapter we are doing entirely from the company's angle only, not investors angle. Investors के angle से हम लोग करेंगे FAR 5.1, which is your financial instruments.
Uh, so why would this be an asset and not a liability?
It's your expense you have incurred right now, जिसका आपको benefit बाद में मिलने वाला है. Liability का मतलब होता है कि आप बाद में पे करोगे. This you have already paid on 1st of November. You have paid the that issue cost to your underwriter. इसका benefit आपको मिलेगा just like prepaid insurance. You have paid your insurance right now for 3 years. इसका benefit आपको 36 months में मिलेगा. So this is why this is the current asset and not liability. Liability होता तो ये तो आपको फिर फ्यूचर में पे करना पड़ता ना सेटल करने के लिए.
Okay. Okay. Done.
चलिए, दिस एंड्स योर फर्स्ट मॉड्यूल. आप इसका एक बार थियरी गो थ्रू कर लेना. इट्स एग्जैक्टली व्हाट वी हैव डन. वी आर गोइंग टू डू बॉन्ड्स पार्ट 2 टुमारो. कॉन्सेप्चुअली नथिंग इज गोइंग टू चेंज. हम लोग क्या करने वाले हैं? वी आर गोइंग टू अंडरस्टैंड हाउ जर्नल एंट्री वर्क्स फॉर द डिस्काउंट, प्रीमियम, bond issuance cost and the actual interest which gets outflow from the pocket. इसकी हम लोग एंट्रीज प्रिपेयर करेंगे and then your bonds will get completed fully. आपका एग्जाम शीट मैंने ओपन कर दिया है विद द आंसर्स. एक बार चेक कर लेना. इफ यू हैव एनी क्वेश्चंस वी कैन डिस्कस दैट टुमारो.
The same answers.
सॉरी, सेम आंसर्स मींस
The answers for the simulations.
एवरीथिंग आई हैव ओपनड अप. तो आप एक बार चेक कर लेना और कोई भी क्वेश्चन है तो आप मेरे को पूछना.
I cannot see the answers.
एक ही मिनट दे दो मेरे को. वेयर इज द एग्जाम. अच्छा, आई नीड वन मोर स्लॉट ऑफ 6 आवर्स फ्रॉम यू. आई वांट कंसोलिडेशन हम लोग वन स्ट्रोक में करें. आई हैव ओपन फॉर सिमुलेशंस आल्सो, ठीक है। सो एक बार आप मुझे नेक्स्ट वीक का टाइम स्लॉट बताना, वी विल बी एबल टू रैप अप सॉरी फार फॉर दिस वीक। सो नेक्स्ट वीक एक बार कंसोलिडेशन वन गो में निपटाते हैं। इट्स वेरी वेरी सिंपल एंड रिदम में होगा तो यू विल अंडरस्टैंड द थिंग्स। सो नेक्स्ट वीक आई वांट योर वन स्लॉट फॉर 6 आवर्स, ठीक है।
Uh, at what time
आप
per
बताओ,
day?
आउट कोई भी टाइम आप मेरे को 2 3 स्लॉट्स बताना नेक्स्ट वीक, जो जो डेज आप फ्लेक्सिबल हो, एंड देन वी विल कंक्लूड वन डे।
Okay.
चलिए, थैंक यू सो मच, बाय।